as we look at the oil market, I was in Vienna last week and they did everything. They pulled out all the stops to create, some would say, this floor of $60. Transfer $60 of a floor into commodity currencies for me. Where is the upside? Is there upside in commodity currencies, in your view, into 2020?
We think there is. When we think of commodity currencies in the context of G10FX, CAD is the first to come to mind. Ironically, though, the Canadian dollar actually exhibits a less strong and stable relationship with crude currently than it does with yield. The yield in Canada, though, is very much at the top of the pack of G10FX. And that's super important if we come back to the point I mentioned earlier about the low volatility environment across G10 exchange rates. That low volatility environment suggests carry trades outperform, and carry trades outperforming suggests CAD does well.
What are your preferred carry trades then? I mean, I don't know whether you've got any, for example, involving the Norwegian kroner, if we stick with the theme of oil currencies.
When we think of carry trades, for us, dollar Swiss is the most attractive. Firstly, it has the most positive absolute carry. It secondly has the most positive carry in volatility adjusted terms. It also has the benefit, compared to a euro-dollar short or a dollar-yen long, of not running this big valuation risk. The problem with being long the dollar versus those low-yielding currencies is that they're very cheap versus long-term equilibrium. So while it's okay to pick up the carry now, you're running valuation risk. Dollar Swiss doesn't have that same problem.
What are the other major carry trades for you, Sam? Because you wrap it into the global trade theme and you say there are diminished downside risks to global trade. That helps the carry trade in itself. Are there other carry trades perhaps beyond G10 that are of interest? I spend a lot of time talking about Egypt. I spend a lot of time talking about Turkey down here. But just take me beyond the bandwidth of G10 in carry.
The view from our emerging markets team, led by Marcelo Carvalho and Gabriel Gerstein, is that high-yielding EM will perform. They think the backdrop we have of very low real yields in the US is likely to stay supportive for those currencies, and that the balance sheet expansion we've seen from the Fed is also going to be supportive for high beta EMFX. Furthermore, when they look at the local currency rates markets for those high beta EM, they believe they've still lagged the rally that we've had throughout this year in core DM yields. So those carry trades, they think, are likely to perform as well going forward.